Hello, very good morning to all and happy Friday. Welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Happy Friday. Today is the 10th of May 2024. So before we jump straight into our short Daily Dose of Market Insights for today, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so right now, as usual, before we jump straight into the short-term technical outlook on the cross-asset classes, let's have a recap of what has taken shape yesterday in terms of the cross-assets performance, key events, and their respective data. Okay, so right now, important things that has taken shape yesterday is number one, in the FX market, we do see a bit of a whipsaw movement before the start of the US market, where we start to see the dollar's strength coming back into the picture, where Bank of England has started to give a much more clearer indication that they are actually winning the war on elevated inflation in UK, and the Bank of England governor actually have made a much more reinforced signal that they are having a much more dovish tilt to be in line with their cousin, the European Central Bank ECB, to increase the potential odds of the first interest rate cut in UK to come as early as June or July. All right. Whereas if you compare to the US Federal Reserve, they are still pretty much hesitant about talking about the first interest rate cut to come in June or the summer months. And right now, market is still looking at a rate cut instead of a rate hike in US, but come in a much later date in the month of September. All right. So let me share with you this Bank of England thoughts over here. Their train of thoughts. Okay, pardon me. Okay, so this is what happened. So Bradley, which is the Bank of England governor, he actually signaled that BOE may cut rates more quickly than expected. And also, if you look at the central bank, the number of members that they voted, there's 9 of them. So 7, okay, perhaps you guys can't see it, so let me expand it bigger. Okay, good, okay. All right, so out of the 9, 7 voted to maintain rates at this level at 5.25%. But however, 2 started to actually in favor of an interest rate cut yesterday. So we start to see a very change in the thinking of Bank of England officials. Initially, at the end of last year, they are still less, I would say that less dovish than the US Federal Reserve. But all of a sudden, since February, Bank of England starts to actually have that less hawkish tilt and more skewed towards the dovish side, very similar to the thinking of their cousin ECB. So what we could see over here is initially there's actually a spurt up in dollar strength before the start of the US session, because the Bank of England actually made an announcement before 9:30 p.m. Singapore time. Then when the US session starts going over here, we do see a bit of pushback in the US 10-year Treasury yield. Why? Because of that, there's this weekly initial jobs data, but this particular job data was on a weekly basis. It's not as important as non-farm payroll because there's a lot of noise going on this weekly. That weekly initial jobless claim actually climb up higher than expected. That means more people are jobless. That means that indicating to us that potentially there is much more softness in the US job market. But don't forget, this data is rather erratic because it's a weekly data rather than a monthly data. So with that in mind, right, there's a bit of noise on the FX market. So if you look at the FX market over here, all right, so this is the 5-day rolling performance of the major currency as of now we're speaking. So this was the initially sell off in the dollar before stabilizing in the later part of the US session. And right now during the Asia session, you see the dollar strength playing that catch up. And the one that is the outlier will be the dollar yen after that pullback that's taken shape yesterday. And right now it's actually tracing higher. So all in all, right, what we could see over here is based on this 5-day rolling performance of the dollar against the major currency pair, including the Aussie, the Kiwi, and the Chinese yuan as well. And you see the sterling, dollar sterling is picking up as well. That means sterling weakness coming back into the picture. We cannot totally write off dollar strength story yet, even in the short term. All right, so the dollar strength story is still pretty much intact as well. All right, so now this for the FX market. And also if you look at the FX market over here, it also seems to be supporting this potential less dovish US Federal Reserve, which is also in favor of a medium-term dollar strength story. Why? Because if you look at yesterday's, there's actually a Federal Reserve official speech, which is daily. So she did mention over here is that more time needed for restrictive rates to work. So what it implies that the thinking of the Federal Reserve official is we are not in a hurry to cut interest rates versus what the thinking of other developed nations central bank like the Bank of England, who has a much more dovish tilt. All right, so at the end of the day, the US will be one. In fact, potentially the US will be the last major central bank to actually cut interest rate. Okay, major, not minor. Okay, so one of the other bank will be potentially Australia. So Australia will not be able, due to the elevated so-called inflation data in Australia as well. They also be one of the few central bank in the world to actually develop nation central bank to cut rates as well. So that actually explains Aussie dollar is in a big sideways range, because right now they are almost having the same change of thoughts with the US Federal Reserve. But if you compare to other currencies over here, is that the dollar seems to be strengthening against the euro, and even despite yesterday that push up in the euro dollar or the sterling dollar, the euro and the sterling dollar still remains above their pivotal resistance level, which I'm going to share with you in the short-term technical outlook chart shortly. All right, so that's for the FX story over here. Then what we could see over here in the markets for the risk on, risk off market using the US as a benchmark stock indices, US benchmark stock indices, pardon me, is that we start to see a very strong recovery on the S&P 500 throughout the session. And during the close, it's traded the high of the day at the close. So there's much confidence to push the US market higher. S&P 500 closing above the 5,200 psychological level, but not led by the semiconductor stocks, but led by other industrial and other component stock like the industrial and the banks, which is pretty much healthy. That means we start to see the rally spreading up to the other sector. Okay, so how do I know that? By looking at the heat map of the S&P 500. So what we could see over here is that the semiconductor is only the sector that is deeply in the red yesterday, they underperformed, but other sectors starts to actually shape positive return. Okay, the banks and even the mega cap stocks itself, the 7 mega cap stock, Apple is up by 1%. Unfortunately, Tesla is continuing to be underperforming. Why? Because of its ultra competitiveness EV space that are in competition with the China EV right now, which they are continuously increasing their export throughout the rest of the world and causing Tesla to lose its competitive advantage. So Tesla, in order to maintain their market share globally, they got to actually reduce their selling price. So that actually eat into the profit margin of Tesla. So that actually explains Tesla continue underperformance throughout year to date. All right, but most importantly, if you look as a whole of the entire S&P, there are more greens than red. So despite the fact that, yeah, we know that semiconductor is one of the key component sector in the S&P 500 due to the high weightage of and the last couple of years of this AI optimism. Yes, they underperformed yesterday, but the rest, it didn't drag down the rest of the sector, which is the rest of the other sector like the financial, the industrial. All right. which is actually rather positive. So what we could see over here is that we know that the AI component stocks or the semiconductor has a higher weightage in the Nasdaq. So look at Nasdaq yesterday, they actually underperformed due to this issue of underperformance in the semiconductor space. So the Nasdaq 100 was like sideways yesterday. What we could see over here. Oops, sorry. Okay, it's kind of sideways. Then the Dow Jones also outperformed the S&P 500 because of its lower weightage of semiconductor stocks. Okay, very clear, nicely uptrend by breaking above the upper neutrality range that we have on our short-term technical outlook yesterday. All right, so all in all, right, what we could see over here is that we know we got to respect this short-term bullish momentum trend on the Dow Jones Industrial Average and the S&P 500. Perhaps we may see a bit of short-term sideways movement on the Nasdaq 100, which I later will share with you on the short-term technical outlook. Okay, so a positive momentum seems to be spilling back into the US stock market, but we start to see positive momentum already in the European market, the German DAX, which I highlighted on Wednesday, breaking up above the symmetrical triangle range, then followed by a very strong, resilient performance on the China-related stock indices as well, which is the Hang Seng Index. And Japan continue to remain stuck in a sideways complex range configuration. Right, so that's for the FX market. Gold continue to be holding resilient and firm above the 2,300 psychological level for spot gold XAU/USD, and also due to this very dynamic situation in the Middle East. For now, it's still unsure whether there's going to be a ceasefire between Israel and Hamas. That's also supporting gold price as well. And do not forget over here is that because of that US 10-year treasury yield going to trade sideways, that also support gold because gold itself doesn't has any interest rate if you were to actually long gold. So it actually reduce the holding cost, the opportunity cost for gold. Okay, and despite the fact that this unclear situation in the ceasefire between Israel and Hamas, we see oil prices continue to actually recover above that $78.40 medium-term pivotal support level. That's West Texas crude oil, which I've been highlighting in my short-term technical outlook throughout last week. Okay, so that is the data that I want to highlight for you all today. And what other data to take note of before we start off the videos today? Well, there was this Japan data. So in this Japan data, in terms of the household spending seems to be in improvement on the month-on-month basis. So what we could see is that consensus was negative 0.3%. Household spending going to improve at 1.2%. All right, and even on a year-on-year basis, the household spending didn't actually, because the stretch of the year-on-year basis, they didn't actually perform as bad as market is expecting. Okay, market is expecting negative, market is expecting negative 2.4% year-on-year, but it came down much smaller at negative 1.2%. So it seems to me that a bit of consumer confidence that is coming back into the Japanese. No, consumer confidence is still strong in the Japan, robust in the Japanese economy, and household spending seems to be starts to pick up as well. So that actually in the medium term to long term, it should be positive for the Nikkei 225. But as I said, that only in the short term, it continues to trade within that sideways complex range configuration. All right, so all in all, bank lending remains robust as well at 3.1%. So you look at bank lending in the Japanese economy, it's not collapsing. All right, it continued to hover quite healthily at the 3% level since last year. All right, it's not coming down, so that's pretty much healthy as well in terms of bank lending. So indicating to us that the Japanese economy is continue to actually be in a firm footing. All right, then what do we have over here? So all in all, right, that's about it. Okay, so later I'll share with you all what are the key data to look out for the rest of today's session. I mean, stretching to the European side of the story and the US session. Okay, so with that, now let's now jump straight into the short-term technical outlook. All right, starting with the major stock indices first. All right, so let's kickstart the major stock indices, starting from Asia, the Hong Kong D3. Okay, so let me expand my screen. Okay, so the Hong Kong 33 continues to trade within this short-term uptrend since the bullish break of 200-day moving average. Okay, so all in all, right now it's actually hitting the first resistance at 18,800 already, this level. So still no change. I'll be still using 18,380, 18,250. So this is the swing low that was seen on this Wednesday. Okay, I don't want to put it so tight. So the first support level that we can use to watch out for today will be this level here. Okay, at 18,570, 18,570. So this will be the first support level to watch, which is close to today's Asia session low as well. So but this will be something like a pullback level, but as long as any minor pullback didn't surpass 18,380/18,250, we will still maintain the short-term bullish bias on the Hong Kong 33 because its short-term uptrend is still intact. Next resistance to watch will be at 19,390, above it 19,980 next, which is the Fibo extension of 1.618, taking from the low of 22nd of January, and as well as over here, there's this graphical cluster of resistance from 1st of August, last year. All right, so only an hourly close below 18,255, 18,250 will invalidate the short-term bullish bias to kickstart another round of minor corrective decline to potentially expose 18,000/17,900, followed by, if this level doesn't hold, the corrective decline may extend further towards 17,600, which is close to the upward sloping 20-day moving average that is coming to acting as support at 17,600 as well. Then yesterday, on the Japan 225, we flipped to a bullish bias for this short-term range configuration. It hit the upper limit of the range before shaping that bearish reaction in today's Asia session. So that bullish bias has already been met within this sideways range. So right now is another negative movement within this complex sideways range configuration that is in place since 19th of April. Okay, over here, this is a complex sideways range configuration. So where it banked off, right? It banked off exactly at the descending trendline resistance that I drew from the high of, okay, 21st of March. Okay, so all in all, right, it continued to converse or transverse in this complex side range configuration, hit the upper limit of the range, so which is the 38,810, 38,930. So this will be my short-term pivotal resistance. I don't put anything that in between over here because we may get whipsaw easily. So this is the upper limit of the range. So as long as 38,810/38,930 short-term pivotal resistance hold, flip to a short-term bearish bias within this short-term sideways range configuration. First support level to watch 38,010, break below it exposes 37,680, which is close to the middle of the range configuration. However, only an hourly close above 38,930 will invalidate this short-term bearish bias to potentially kickstart a much more pronounced recovery, because it actually break above that minor descending trend line that I draw from the high of 21st of March. Then that could also be the start of a medium-term uptrend phase as well. Next resistance to watch after 38,930 in the shorter term will be 39,110, followed by 39,500 level, okay, which is the 61.8 Fibo retracement of that previous decline from 21st of March to 19th of April. Okay, so that's for the Nikkei 225. Then what we have over here is the German 30. So German 30 over here, the German DAX is going to rally and hit the resistance level already at 18,800. So right now it's coming towards the top of that upper limit of that ascending channel that I drew from the high of 19th of April. So net over here, it seems to us that this up move here is a bit overstretched. How do I know that? If you look at the Bollinger Bandwidth, okay, by putting the Bollinger Bandwidth over here, is now trading close to the upper limit as well. All right, this little red line over here. All right, so given that it's in a kind of a overstretch, short-term overstretch rally condition, there could be a risk of a minor pullback for today. For it on the intraday basis, then we're talking about very short-term intraday basis. So from a short-term intraday, short-term technical outlook, we call it a trend bias. Potentially, it could be a minor bearish counter trend unfolding on the German 30 index given this overstretch rally, and it's coming very close to a key graphical resistance level as well. So using slightly above 18,800, which is 18,910 level, which is the 1.236 Fibo extension level that I drew from the low of 19th of April. So as long as 18,910, 910, that would be my short-term pivotal resistance. This surpass to the upside, potentially this minor counter trend bearish bias setback could unfold or may unfold. Support level to watch on the near term, 18,600 for today. Break below it exposes 18,470. So what is 18,470 is the median line of this minor ascending channel, which is dotted green line over here. Okay, they're going to be at a support level as well at 18,470, also confluencing with the minor congestion area of 7th of May to 8th of May. Only an hourly close above 8,910 will invalidate this potential minor counter trend setback scenario to see the continuation of this impulsive up move to test the next area here. Okay, so that means this is above, this is already all-time high yesterday. Okay, yesterday it ran to the all-time high already. So the next area over here will be at 9. So we got to do Fibo extension level to actually give us where is the next resistance level, because historically there's no other price action. It was already yesterday it really hit the all-time high. All right, so the previous all-time high was this level here at 18,000. Okay, this was the all-time high previously at 18,650. Okay, so this was the all-time high. Okay, on 2nd of April, 18,650. So it really surpassed this level yesterday. So the next level, if it's going to break, will be at after 18,910 will be a Fibo cluster extension level, 19,030 / 19,070. Above it, 1.618 Fibo extension, 19,230 next. Okay, so that's for the German 30. All right, so major US stock indices, yesterday we were neutral. It broke above the upper neutrality limit at 39,050 before shipping that strong rally push up. So all in all, right, if you look at it over here, is that the US market is still lagging compared to the European market. So if you look at the German 30, we make fresh all-time high yesterday, whereas the US market is still lagging behind at this juncture. So what we could see over here is that the next resistance to watch out for will be at 39,775, this congestion area here, then followed by the all-time high of 40,020 on the US Wall Street 30. So in short term, the RSI is at a extreme overbought level, but one thing positive is that there is no signs of a bearish divergence. Okay, price action going to shape higher high. All right, similar to the movement on the higher high on the price action of the Dow Jones Industrial Average or the US Wall Street 30. So yes, we may see a bit of extreme overbought, so there could be a chance of a minor pullback. Pullback level to watch out for will be at 39,230 first support level. Then for sure, this will be the bullish breakout yesterday, so this will be my pivotal support level, 39,050. So as long as this minor pullback didn't surpass or reintegrate below 39,050, we will flip to a bullish bias on the US Wall Street 30 due to its ongoing strong momentum that's being seen on it. Next resistance, 39,775, followed by the all-time high area at 40,020. Only a reintegration back below 39,050 will start to see this bullish momentum starts to die off, and potentially it may start to transverse into a minor corrective decline scenario on the US Wall Street 30 to expose the next support area at 38,750, which is the 50-day moving average. Then thereafter followed by 38,560, which is the former minor swing high area of 25th of April that has been taken out on last Friday during the release of the non-farm payroll data. Hit, pullback, and rally. Okay, so these are the next two support level to watch out for if 39,050 has been taken, reintegrate back below. Then for the Nasdaq 100, kind of it's going to sandwich in a sideways range configuration. So nothing. So I'll still maintain in this potential sideways range for today, 18,180. 17,940 lower limit of the range. Okay, so still maintain that neutrality stance on the Nasdaq 100. Unless we do have an hourly close above 18,180 today, then we could validate a bullish breakout scenario to see for the Nasdaq 100 to follow in line with the S&P and the Dow Jones Industrial Average. Next resistance to watch out for 18,380, followed by the current all-time high area at 18,500. Okay, that's for the Nasdaq 100. Now, FX market. So for the FX market, let us start with the Asia side of the story first. Aussie dollar. So Aussie dollar continues to remain bearish below that 66.45 short-term resistance. It didn't surpass. Price action trade down lower during the Asia session right now, with the RSI exiting up from the overbought level as well. So first support level to watch will be at 65.85 for the Aussie dollar. A break below it exposes 65.50 / 65.20, which is also the 20-day and the 200-day moving average. I think it's a support level. Okay, only an hourly close above 66.45 will invalidate this short-term bearish setback scenario on the Aussie dollar within its medium-term sideways range configuration to see it inching higher towards the top of the range at 66.80, 67.30. So what's 67.30? 67.30 right now, if you look at the daily chart, is at the upper limit of this symmetrical triangle range configuration that I drew from the low of 13th of April, 3rd of February. Okay, so this dotted, this not dotted, this gray trend line is that symmetrical triangle range configuration potentially that is still unfolding in a medium-term time horizon. All right, so that's the daily chart. Okay, so whatever potential bullish move that could unfold in the Aussie dollar, maximum for now will be at the resistance will be at 67.30, which is the lower limit of the symmetrical triangle range configuration. Okay, that I highlighted earlier on the daily chart. All right, so that's for the Aussie dollar. So for the dollar yen, yesterday we were attempting to look for that setback scenario to take shape below 56.10. Setback support level will be at 54.55, but price action doesn't seem to hit that level before bouncing off. And where it bounces off right exactly at the 20-day moving average close to it. So with that, this level here, which is close to the 20-day moving average, will be using as a first support level to watch for today. 155.16. And what's interesting over here is that the RSI managed to bounce off from a parallel ascending trendline support level as well in today's Asia session. So with that, it seems to us that short-term momentum seems to be coming back into the dollar yen. So I will be less hesitant to maintain that pullback scenario strategy. So instead, I'll flip back to a bullish bias on the dollar yen, using 154.55 as my short-term pivotal support, slightly below 155.16. So I don't put it so tight. So 154.55 short-term pivotal support level. A breakout above 156.10 exposes the next resistance at 157.70, maximum 157.90, which is the minor swing high area of 1st of May, which potentially kickstart that second round of intervention by BOJ as instructed by the Ministry of Finance during that point in time. So 157.70 is also the Fibo ratio of that 61.8% Fibo retracement of that previous sell-off from 29th of April to 3rd of May. Only an hourly close below 154.55 will revive that corrective setback scenario, exposing the next support level at 153.30. All right, next. So flipping to a short-term bullish bias on the dollar yen. Why? Because of positive momentum starting to creep back into the dollar yen on a shorter term basis. European currency kind of mixed right now. So if you look at it, it's still going to congest in the sideways range. The European sterling dollar, yesterday it hit the first support level before bouncing up again, and right now it's now trying to actually shape that bearish reaction of that short-term pivotal resistance that we highlighted earlier, 125.65. Okay, which is so close to the 200-day moving average, I think as a resistance at 125.40. Okay, so still no change, still using 125.65 to maintain that short-term bearish bias on the sterling dollar. first support level to watch right now will be at 12460 for today. Only a clear breakdown below 12460 may expose the next support level in short term at 1.2390. Only an hourly close back above 12565 will invalidate this short-term bearish bias on the sterling dollar to potentially seize a squeeze up towards 12640. A break up above 12640 that was last Friday's swing high exposes the next resistance at 12710. So once this scenario happen, right, a break above 12565, that means that short-term dollar strength short-term dollar strength scenario will potentially be invalidated as well. All right. Now, very sideways for the euro dollar. So euro dollar yesterday also squeezed up after hitting the first support level that we highlighted, but now also managed to stage that bearish reaction of the 50-day and the 200-day moving average that's adding as a cap, as a ceiling to it. All right, so with that, no change, still using the 1.08 as a short-term pivotal resistance level. So that was last Friday's swing high. So as long as this level didn't surpass, again, the euro dollar potentially could do a bit of what I call swing down movement, but it got to break below this first support level at 1.0755. A break below 1.0755 exposes yesterday's minus swing low at 1.0730 for today's short-term technical outlook. So kind of rangy configuration as well on the euro dollar. So hitting the top of the range. So potentially it may retest the lower bottom of the range for today at 1.0730. However, hourly close above 1.08 will invalidate this short-term bearish bias on the euro dollar to see that squeeze up to unfold, very similar to the sterling dollar. Next resistance level to watch 1.0850, followed by 1.0880 level. All right, so overall, we still see US dollar on support. So potentially, as long as this US dollar level on support level holds, potentially we could see some form of dollar strength coming back into the FX market, at least in the short term for today, from a technical analysis perspective. Now, for the gold market, XAU/USD, so right now it's now trying to it's now shaping that breakout already. So breaking above this impending this bullish descending wedge configuration yesterday, and also above the 200-day 20-day moving average. So hitting the first resistance that we highlighted, the zone at 1235 2350 2365 level. So given this bullish break above this this bullish descending wedge configuration, shaping that bullish breakout. So with that, right, I'll be much more confident to actually title my key short-term pivotal support level for today. Okay, using yesterday's swing low area. Okay, so sorry, not yesterday's swing low, this area here. Okay, this breakout point. Okay, I don't put it so tight at the 20-day moving average. So this will be a first support level, pullback support, but the pivotal support level will be here, slightly lower, which is the former minus swing high of 6th of May. So if this is an impulsive up move, this should be a wave 1, wave 2, and this is the start of a wave 3, a minor wave 3. So this level here will be my short-term pivotal resistance level. So let me copy this. So that level will be 2,327. Okay, 2,327, 327. Okay, then this will be the next support level. Oops. 60. Okay, so as long as any potential pullback didn't surpass 2,327 level, tighten short-term pivotal support, still maintain that short-term bullish outlook on XAU/USD. Next resistance level to watch after 2,365 will be currently the all-time high area here at 2,420. Okay, that minor swing high close to the all-time high area 2,420. Only an hourly close below 2,327 will invalidate this bullish breakout. That means we start to see a failure bullish breakout instead, to see another round of choppy sideways move to reintegrate back into that range. So after below 2,325 will definitely expose this next support level at 2,303, which is close to the psychological level of 2,300. Break below it, sees the 2,265/2,260 medium-term pivotal support level right now, which is also close to the upward sloping 50-day moving average. All right, so that's for spot gold XAU/USD. Still maintain that short-term bullish bias with a tighter key short-term pivotal support level for today at 2,327, given yesterday bullish breakout of the upper limit of this bullish descending wedge configuration. Now, what's next for the not XAU actually, West Texas crude oil? So West Texas crude oil continues to trade within a bullish, we call it potential recovery scenario. Why? Because of this bullish reversal hammer configuration that's being spotted right at the retest at that 78.40 medium-term pivotal support level. Right, so no change. We're still using that 78.40 as my pivotal support for today. Okay, potentially still looking for that strategy to play out, that recovery scenario to play out. First support level to watch will be yesterday's low area at 79.15 level. Okay, 79.15 level. This is the first support, but don't put it so tight. So still use 78.40 as my short at the pivotal support level. As long as this level didn't surpass on the downside, potential recovery scenario, short-term minor recovery scenario could be still intact. Next resistance to watch will be at 80.80 in the short term, followed by 81.70. All right, over here, which is this former minor swing low, retested before that minor sell-off takes shape. Okay, so for sure, in order for it to have the much more pronounced recovery scenario next week, it got to break out above 81.70 going forward. Also, the cluster of the 50-day and the 20-day moving average also acting very close at this 81.70 area. Okay, so this, but in the short term, this should be the resistance to watch out for, 80.80 followed by 81.70. So, however, if we start to see a breakdown below 78.40, then we will start to see weakness coming back into West Texas oil to expose the next support area at 76.90, 75.50 in the short term. Okay, so that's sum up for the short-term technical outlook on the cross asset classes that I like to cover. So key data to watch out for later for today. Okay, so we'll be at, okay, there's some sentiment data, Econ Watchers survey outlook for Japan out at 1 p.m. Singapore time. And thereafter, you have that preliminary Q1 GDP growth rate in UK out at 2 p.m. Singapore time. So market is actually expecting a recovery on a Q-on-Q basis at 0.4%. But on a year-on-year basis, market is also expecting no change, also a slight recovery from previous quarter of negative growth of negative 0.2% to 0%, no change. Okay, so that's 2 p.m. Singapore time. And throughout the US session over here, something to look out for will be the consumer sentiment. Why consumer sentiment is important? Because it allows us to have a gauge on consumer spending, which is the part of the key pillar of the services industry in US that drive the services industry in US, which make up close to 2/3 of their economy rather than the manufacturing sector. So consumer sentiment, this is the flash figure for May, has been rather lackluster. So market is expecting 76. So if you look at the trend of this Megan consumer sentiment, it has been inching down. Okay, not this bank lending one I'm talking about for. Yeah, this is the one. All right. So if you look at the trend, it has been starts to turn down after hitting a high of 79 points in January this year. It starts to inch downward. So if it starts to see a further inch down today, what market is expecting 76, another inch downwards lower. So that's representing softness in economic growth. So softness in economic growth will actually prompt the US Federal Reserve to be not so hawkish. All right, that means, i.e., there could be still rate cut in the US economy before 2024 ends, at least one, okay, rather than hiking. But however, we also be mindful about future inflation trends, which is inflationary expectation. So this one is based on survey. So market will be focusing on the 1 year. Okay, so there's 5 year, and this one is 1 year. Okay, so the 1 year inflationary expectation last month has been inching up to 3.2%. Okay, so rather than 2% now. So what we could see over here is previously it starts to plateau. Then last month it starts to bounce up from 3.2%, and that's the highest since November last year. Okay, it also surpassed. So what if the 1 year inflation expected to inch higher? It means that there is still sticky inflation in the short term in the US economy. So that could also allows the Fed to be not so dovish as well. That means they could potentially at most ignite one interest rate cut going forward. All right, so that is the situation that US is facing right now. Slow growth potentially, but however, inflation is not coming down as fast as intended by the Fed. So that's the 1 year one. So if you look at the 5 year longer term inflationary trend based on this sentiment survey data, also very similar trend as well on the 5 year basis. So the 5 year also starts to shoot up last month at 3%. So if it continues to go up again for this month as well at around, let's say, 3.9%, so that's also indicating to us that longer term inflationary expectation is sticky in the US economy. So something to watch out for during this economic data release at 10 p.m. Singapore time today. Then thereafter, we do have a slew of federal officials speaking as well earlier. 9 p.m. you have Fed Bowman speaking. Then after that, at 12:45 p.m. we have Fed Gooseby speech. Then at 1:30 a.m. we do have Fed Bear speech. Okay, so that's about it. And over the weekend, very strangely, Saturday we do have the release of the all-important China inflation and PPI data. So that's something to look out for over the weekend as well. That could actually impact the Hong Kong or the China stock market indices trading on Monday. If we start to see a very, very weak inflation data, that means for China as well as PPI, that could actually means that that deflationary risk spiral still remains intact in China. All right, so with that, that pretty much sum up for today's daily dose of market insights. So I wish you all a good Friday ahead and as well as a great weekend ahead. So with that, thank you, and we shall speak again on next Monday.